what they're doing, right? They're having an asset and then they're leveraging it to buy other.
That's exactly how I did grew my portfolio.
Wow, money, 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 money.
Fixed rate has not really followed suit with the drops of the variable rate, so they don't correlate. So a lot of people misunderstand that if the variable goes down, that means fixed are going up. Not necessarily. Another, common mistake I see often is,
hey, vroom, vroom.
For example, variable rates right now is probably what I'm putting, all my investors. I take everything variable. In the long term, I always win.
So what are some of the risks that are involved when it comes to actually purchasing an investment property?
I think the first risk is when today on my desk, the bank actually called me and said, hey, we can't get this approved.
It's also sad. There's people who are potentially on the brink of losing a lot, who are even one paycheck away from potentially losing their home. And it sucks. Welcome to Mortgage Minute. I am your host, Janelle Edwards, real estate professional here in the nation's capital, also known as Ottawa. And today we are here to talk everything when it comes to lending in Canada. We're going to be debunking some myths, really get granular and uncover the real uncouth truth when it comes to getting a mortgage and lending here in Canada. And I'm so excited to be joined here today with my friend and my preferred lender, Ivan Ramasawmy, with Referral Mortgages. And a little bit about Ivan is not only is he a mortgage agent, he's also a real estate professional and investor for over a decade. And you're a father, you're a husband, and you're also an African boy from Mauritius. And I don't meet people from Mauritius often, so gotta send you so much love. And I'm so excited to have you here, and we are going to get really into it about what's happening in the landscape of Ottawa today and Canada when it comes to mortgages. So Ivan, welcome.
Thank you, Janelle. Thanks for having me here.
Awesome.
We're looking forward to getting the session going.
Let's do it. Let's get it started. There's so much happening right now in the landscape when it comes to mortgages. There's a lot of people, I work with clients all the time, who are just uneasy with things that are happening. We have looming tariffs. We have changes in interest rates. We have new mortgage rules that were just implemented in December, not to mention an economy that is just quite fragile right now. So it's understandable. There's a lot of people who have a lot of questions. So first and foremost, let's speak to that first-time home buyer who right now is challenged between whether they should continue renting or take the leap of faith and actually purchase. So if they are right now in the position that they can in fact purchase, what would you say are some key things that they need to do right now to get themselves prepared to purchase their very first home?
It's a great question, Janelle. A few things you can do. First thing they need to take a look at is their finances. See how financially ready they are. Take a look at down payment, how much they have right now, how much monthly payments they could take on as on a mortgage. What they're comfortable with, lifestyle, don't just consider the mortgage payments. What else is going on? Kids, activities, what does your credit bureau score looks like, right? So these are all a few key things they need to look at. Also do some research, understand what's out there, understand what government incentive exists out there. And the most important part of this is before you start even shopping is getting a pre-approval with a lender, with a mortgage professional. And also consider, what are the costs comes along with buying a house. What are the closing costs, what are the utilities, taxes, maintenance, location, what does commute look like, public transit if you need to, what's around there. And then after you've done all those homework, then talk to your real estate agent, right? Make sure you use a real estate agent because as a buyer, it's the seller paying the agent. So you're getting all the advice and negotiation for free.
That's so key. Now, that was a whole lot. Oh my gosh, there's so much to do. Now, you don't have to answer this right away, but with all of that homework, is it even still worth it to buy?
Yes.
Well, we're going to get more into detail with that a little bit later, but you mentioned a really key thing when it comes to credit. That's right, credit. I work with people all the time, and credit is a huge thing that, it's kind of like that, thing people don't really want to talk about, right? But it's a necessary and key thing when it comes to actually qualifying for a mortgage. So What is the minimum credit score that you need just to gain entry into the market?
Most lenders require a credit score of 680. You might be able to get one with an insured mortgage with one of the insurers with a credit score of 600. Now, if the credit score is below that or close to the 600, we might have to use alternative lending, which costs a little bit more expensive than the standard A lenders.
Okay, so somebody out there who perhaps has a lower credit score of 600, the hope is not lost. But I guess the other side of things is they're going to be paying more. I think that just makes sense.
Yes.
Okay, so what can they do right now to actually increase their credit score?
First thing, go find out what your score is.
Okay.
If you already have credit with certain lenders or certain banks, they already have this software available, online banking, to find out what your score is. Mm-hmm. If not, just go to Equifax and challenge. You need to know your score.
Nice.
Once you have that, figure out, a few things you can do is make sure you pay your bills on time.
Hey. On time, people, on time.
On time. And try to keep your balances at the 33% of the limit.
Okay.
1/3 of the limit.
Yeah, that Jesus number, 33. Yeah, so under 33% of your credit limit, that is the sweet spot. And then paying consistently on time, those are two things that you can do just to get back in the game of increasing your credit score.
And it goes up pretty fast, right? If you start making those payments on time there, within 30 days, 60 days, that score you also start seeing going up.
Nice. Yeah. Awesome. Well, we need money to buy a house, contrary to what maybe some people think. So can you buy a property nowadays with no down payment?
No, so you do need a down payment. Okay. I mean, there is ways of going around there, but you have to have equity, available on existing properties. Right? So you can borrow against that equity to go and use as a down payment on a purchase.
Hey, so is that what the wealthy people are doing?
Yes.
That's what they're doing, right? They're having an asset and then they're leveraging it to buy other...
That's exactly how I did my portfolio.
Oh, wow. That's awesome. Awesome. So we're not purchasing a property without down payment. However, if you already have an asset, you can leverage that to purchase more property.
Yes.
Okay. Now, you kind of threw a whirlwind at me about uninsured and insured mortgages. So let's talk about that. What does that mean?
So insured mortgages is essentially if you're putting less than 20% down.
Okay.
Which means you have to get a default insured mortgage. There's 3 companies out there that does them in Canada. You have to pay for this insurance. It goes between 2.8% to about 4.5%, depending on the size of your down payment. And it just lower risk to the banks, to the lenders. In case of default, they'll get repaid by those companies. But yes, those fees are expensive, but the banks will also give you a lower rate, which usually kind of break even at the end of the term.
Okay.
I mean, if you want to get into the down payment section, right away, we could get into that.
Let's talk down payment.
So minimum 5%, but 5% you're getting yourself a $500,000 property. So and for the first 500, it's 5%. Anything above is 10%.
Okay.
For example, if you're buying a house at $600,000, you essentially need about $35,000 as a down payment plus closing costs.
Nice.
So add about 1.5% of the purchase price, with on about $45,000 minimum you would need to close on that property.
And for those of you who are unfamiliar with the Ottawa region, $500,000 more or less gets you a condo. You can get a condo that's a high-rise condo. You can also get one of the older build condos, and even some new build condos are available at that price point. So there's still quite a lot of options in that $500,000 range. And I think that's a great deal, that you can put down 5%, still get into the market. You also have to be aware that a lot of these condos may or do come with condo fees. So that's also something that you need to consider as well too.
Yes. Some of the new rules that came out as of December is one first-time home buyer, we can now amortize on 30 years versus 25 years. New constructions are eligible for 30 years.
Wow.
You don't have to be a first-time home buyer for new construction. So if it's a new construction, it could go up to 30 years. And the price point has increased from $1 million to under $1.5 million. So $1,499,999.
Wow. Money, 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 money. Now, okay, that sounds great. I can now amortize my mortgage as opposed to 25 years. I can now amortize it to 30 years, giving me more of a lesser payment per month. Is it worth it?
It increases affordability.
Okay.
So if you're looking at a property, that's suitable for your family, let's say you're looking at something that is at 600, but to get you what you need at 650, well, the 30 amortization will help you get there.
Right. Now, let's be real though. When it comes to mortgages, I heard that the front load of a mortgage, you're paying a whole lot of interest before you even get to penetrate the actual principal amount. So to avoid me paying so much interest over the term of 30 years, is there something else I should consider doing?
Well, there's every lender will give you options, prepayment privileges, where you could do biweekly payments that will drop automatically, that will drop you back to 25 years by doing biweekly.
Just by switching from my monthly payment to a biweekly, I'm now back to 25 years.
Yeah, so you won't feel the pain as much as going to 25 years, right?
Do banks tell you this?
A mortgage professional should tell you this.
Mortgage professional!
Yeah. And then, there's also most of the lenders will have, between 10 to 20% prepayment privileges. You could double up your payments. So yeah, you could bring that back down and save on the cost. It's just that it helps you get into that property that you want to get into right away instead of waiting.
Nice. Okay.
And right now, as we know, rates are, going down. Values of homes are most likely going to start increasing. Well, I mean, we're on an upward tick, not a downward.
Yeah. Well, you know what? I feel like this conversation about interest rates, variable versus fixed, it almost feels like a rap battle, right? Like, should you go variable? Should you go fixed? Now, we've recently had a couple of interest rate decreases. It's also spurring the market again. We're seeing a lot of activity happening, which we predicted. The spring market has sprung, folks. But in your humble opinion, because we are still at the beginning of the year, there's still so many more announcements to go. And of course, the announcements the Bank of Canada does is in relationship to variable rates. So what would you recommend perhaps a first-time home buyer doing in terms of should they go variable or should they just lock into a fixed?
I would say it depends on circumstances, okay? Especially for first-time home buyer. Somebody who understands finance and understands how the market works and not too stressed about, fluctuation, then yes, I would say variable is probably the best bet right now. For now, we're still expecting it to drop by maybe another % before the end of the year. And then the fixed rate has not really followed suit with the drops of the variable rate. So they don't correlate. So a lot of people misunderstand that if the variable goes down, that means fixed are going up. Not necessarily. So right now the fix has not really moved. So, but if you lock into a fix right now, then you're stuck in there for that term for 3 or 5 years. And then, we're expecting fix to drop by the end of the year. Then you're stuck. You can't do anything about it. The penalty is going to be substantial.
Right.
If you take a variable, then you could always fix it at the end of the year into a 5-year term or a 4-year term, depending on how much is left on the term. So yeah, so there is a lot of follow-ups and to do with a variable rate. I mean, it's not guaranteed rates are going to go down, so there's a possibility of it going up. Yeah. You never know. And that payment could increase. For a lot of first-time home buyer, they're already stressed getting into this.
Yeah.
And they just want to know, how much am I going to have to pay every month for the next 3, 5, 4 years? So then, yeah, maybe a fix might be better suited for that first-time home buyer.
Yeah. Well, you know what? This is great news. I feel like there has been no other time in the most recent history that really is garnered towards first-time home buyers, of getting them entry into the market, getting them affordability in terms of the decreasing interest rates, and then of course the amortization. So thank you so much for really detailing that. Now, there are some people out there who have made some blunders when it comes to actually purchasing their first home. So what are some mistakes that you have actually seen first-time home buyers do when it comes to purchasing their house, and what should they do to prevent that?
First mistake is not getting your pre-approval. is going to start shopping for a house, putting an offer, and then coming to a mortgage professional or to their bank, and then they come and say, well, you don't qualify for this. I've seen a lot of people just stop their shopping for homes because of it.
Right. Now, is it easy enough for me to just go on like an app on my computer and put in my information, and then it regurgitates some type of number, and then I start shopping? Is that enough? I strongly don't. Yes, you could do what we call a pre-qualification. It's good to do, just to at least you understand approximately where you're at. Right.
But I prefer doing, I strongly recommend it by doing a pre-approval is by submitting all the documents.
Okay, so folks, get your pre-approval. Don't be out here shopping and you don't know how much you actually qualify for. I also encourage my clients to do the same thing. Before we even take a look at one property, we get that pre-approval. And so can you just run down what would be required of a pre-approval?
So if you're employed, you're going to need your most recent pay stub. You're going to need a letter of employment, proof of down payment. We have to prove that you've had your funds for 90 days plus.
Okay.
If it's a gift, we need to know a gift letter. Mm-hmm. By the way, gifts can only come from immediate family members.
Ooh.
So parents, sibling, grandparents.
Okay.
Comes from an aunt. We might get an exception.
Okay.
But it's rare we do.
Okay, so yeah, I can understand that.
Yeah. I've got them before, right? We're cousin, but they live together, so they were that worked out. But other than that,
okay,
yeah, it's tough to get.
Right.
Another common mistake I see often is, and a first-time home buyer, is they get their pre-approval and then they go buy a car.
Hey, vroom vroom. Oh my God, that just made me laugh. They go and get a pre-approval and buy a car. But you know what? It's so funny. I warn my clients before they even do it. I'm like, don't buy a car.
Yeah.
Don't do it.
Yes.
But some of them are doing that. So please, how does that impact them?
Well, a pre-approval is not an approval.
Okay. Right.
Because we don't know what the property is. We don't know what the purchase price is. We don't know. There's a lot of variables we don't know yet.
Right.
Right? The pre-approval would just look at your current situation today. Mm-hmm. And usually that's good for 30 days.
Yes.
And then after 30 days, the lender's going to redo another credit check. And they're like, oh, something's changed in your finances.
Right.
And a lot of time people have lifted, even if they had put an offer, they've lifted conditions. Mm-hmm. Right? And then it's just, yes.
So there's so many layers that it just makes sense to just buy the house first before you buy the car.
Yes.
Right? Buy the house first before you buy the car. One thing that I also really appreciate about the whole pre-approval process is the opportunity to actually lock in that interest rate for the period of time. And how long can you actually lock that in for?
It goes from, depending on the lender, we go from 90 to 120 days.
Yeah. So that's really good. That gives you peace of mind that if interest rates do increase, or even if they increase or decrease further, that even, you can either ride the waves of the decreasing or lock it if they do potentially increase, and that you can shop a little bit leisurely during that time frame. And I would say on average in working with clients, it does typically take about 3 months, anywhere between 30 days to 3 months to actually find a property if you are serious. So awesome. So you know what? Let's now talk about our investors. I have so many people who right now are looking at what's happening in Ottawa, and some are excited, some are sitting on the sidelines, but either way, there's so much more conversation about investing right now because there's more inventory, there's opportunity to negotiate better, and Ottawa is a very strong city when it comes to investing. You have great, work relations here with the largest employer being the government. We also have a great tech sector, great healthcare sector, and not to mention, in general, it's quite stable. So it has brought in a lot of investors who are interested and people who are looking to invest for the first time. So let's talk a little bit about that. So right now, what are some mortgage products that would be available to an investor right now?
So in terms of investing, I think the first thing we need to look at is in investing. Anything that's key right now is cash is king, right? And cash flow is king in real estate investing. You got to make sure, so it doesn't matter what your rate is, it doesn't matter what, as long as your payments, your rent is covering those payments and it's covering the expenses, then you're king.
Okay.
The property is a good investment. If we focus so much on rates, then we might have, if for example, variable rates right now is probably what I'm putting, all my investors. I take everything variable. In the long term, I always win. Property values are a little bit, you can, like you said, you can negotiate.
Right.
I just did one for a client, it was listed for like 7 something and they picked it up for, I think it was $735, picked it up for $650 a duplex.
Wow.
In Ottawa, they're breaking even in terms of cash flow, but with the rate drop that just happened, now they're actually cash flow positive.
Nice.
And then it's going to drop again by another quarter, and then, let's say they drop by 1%, they're going to definitely be cash flow positive.
Yeah.
At the first initial, it wasn't. Now, obviously, when that happens, property value is going to start increasing.
Right.
So there's a lot more options out there. There's private lenders you could go to, to do, and a lot. If you're buying something that is you have to do a lot of work into, you get a construction mortgage with a private lender, which is interest-only payments.
Nice. And you know what? When it comes to appreciation versus cash flow, I'm glad that you mentioned that cash flow is still king, because over the last few years, Ottawa has also been a break-even city with interest rates having been high. Now that interest rates are going down, we are seeing much more opportunity for cash flow to actually happen. But either way, you're saying that it's ideal for you to even get a property, an investment property, that at least you are breaking even as opposed to being in a deficit.
Yeah. Even if you're in a deficit, depending on the size of the deficit, knowing that rates are going to go down on the variable side, it might still be worth it. Mm-hmm. Again, we got to run the numbers to make sure that. The reason I'm saying this is just, if rates go down, most likely value of properties are going to go up.
Right.
So then you might not, as much as rates will go down, you might not cash flow because the value is going to go up. You might have to put a bigger down payment to make it work.
Yeah, absolutely. Well, you know what? Let's talk a little bit about down payment, because buying an investment property is completely different than buying your, let's say, matrimony home. So what type of down payment or amount of a down payment you require for an investment property here?
Bare minimum 20%.
20%. Okay. So let's kind of unpack that a little bit. So you are on the market to buy an investment property, and let's say you find a duplex for $600,000. Where can I get that down payment? Can I get it from, let's say, my matrimony home? Can I get it from other resources?
It cannot be a gift if it's a rental property.
Oh, can't be a gift. Okay. All right.
So it has to come from your own sources.
Okay.
Or you could refinance your matrimonial home.
Great. And are you finding a lot of folks right now who are looking for investment properties? That's what they're doing?
Yeah.
And we talked about that a little bit earlier, right? About how the wealthy are, in fact, getting wealthy. It's by leveraging properties that they already have, refinancing in order to purchase. Is right now a really good temperature economically to refinance a property?
I would say yes.
Yeah.
I always say yes. But it depends on your personal circumstances. You really got to dig deep into your personal finances and see what you're comfortable and able to put away. It's prioritizing. I had a conversation with these clients the other day, and they said, "Oh, we can't do it because we want to prioritize. Putting a hot tub in our house. We want to put a pool. We want to do this. Buying a new car, a luxury car where their car is still good. And I'm like, well, you're prioritizing." And I had that conversation, and I just said, that's great, you want to do that, but you want to invest, and you want your investment to pay for those goods, or do you want to use your own cash right now, those devaluating assets? And then they're like, oh, good point.
Good point. Great point. Point. I think that's what's the beauty about real estate investing is that you can then buy investments to pay for the depreciating assets in your life. So I think that that's also key. Yeah. What I also love about investing is that you're also contributing to a pool of providing homes and opportunities for people to live in. So there's also a very thoughtful process, more than just becoming financially rich or wealthy. You're also doing a sentiment in terms of helping the community and the greater good. So I also want to preface that because there's a lot of information in the news right now. That's pretty much ganging up landlords against tenants. But I have seen with my own eyes a lot of folks who are investing in real estate and come out on the winning end in a multitude of ways. Number one, helping people, helping tenants, working with tenants and giving them and providing them with a great space, and then also leveraging it to build wealth for their own family. So, and I can say that you can probably attest to the same thing, being an investor yourself.
Well, I can share my personal story.
Yeah.
I bought my first house. I just got engaged with my wife. I was 27 years old. I had no money. I was broke. And I said, I want to buy a house. I don't want to go and rent.
Yeah.
We both had some RSPs, and we used that. We bought a duplex instead of a single dwelling home.
Nice.
We lived in the basement unit and rented the main unit upstairs because that was going to give me more rent. Mm-hmm. That rent covered pretty much almost the whole mortgage. Mm-hmm. So we lived pretty much for free.
Shout out to your wife. Hi, Cynthia. That's a great wife. To be willing to live in a basement so that you guys can earn more money actually renting out the upstairs and basically pay off your mortgage.
Yes. And then, save 50% of those funds that we were working to use that. And then eventually what we did is that we rented that basement unit, refinanced that property. So now that basement rent is covering the extra additional money that I took out. And we used that and we bought a second home. Yeah. And we did the same thing, rented it out, bought a third, fourth, fifth.
And on and on and on
yes.
and on.
Yes. With that 5% that I have from my RSPs. And then from there on, just
kept it going.
Yes.
And then have built a great portfolio for yourself. That's awesome. That's incredible. Now, we can't talk about the good without talking about the bad. So what are some of the risks that are involved when it comes to actually purchasing an investment property?
I think the first risk is when you buy something that's not cash flowing.
Okay.
Because a lot of time when we're buying an investment property, remember it's an investment. Mm-hmm. Okay.
Take the emotion out of it, baby.
Yes, the emotion has to make financial sense before anything else.
Right. Right.
If it's that's the biggest mistake I've seen with a lot of investors, especially first-time investors. Mm-hmm. A lot of emotions involved, and it's you're buying an investment. It's a product, and that product needs to make money for you.
Right. So do the numbers work, not what color on the walls, and if there's carpet, right?
Yes.
Do the numbers work?
Yes. Doesn't matter about the carpet.
Yeah.
It's clean and it's usable. Then yes, it's fine.
Right.
Another thing is doing renovations that are not necessary.
Okay.
Right, doing things that are for luxury, and depending on where you're located. Mm-hmm. Right. So what kind of tenants you get in there, that makes another difference. Right. Right. It's overspending, and then yes, there's always the risk of having a bad tenant. In 25 years of doing this, I've had maybe 2 bad tenants, and both times I didn't do my pre-screening properly.
Okay.
Getting a professional to do the credit check.
Right.
Vetting the client.
Right.
They were tenant.
Yeah.
Both times, my emotions got involved. I felt bad, and I said, "Okay, yes, no problem. I'll get you a unit."
Right.
And then they didn't pay, and then getting them out was not easy. So,
right.
But there's that risk.
Yeah, and I appreciate you sharing that because, again, out of the 25 years that you've been investing in real estate, you've had just, you can count on one hand the poor experiences that you've had in dealing with people, but the good has obviously surpassed and outweighed the bad when it comes to actually dealing with not just tenants, but human beings at the end of the day, right? Yeah. They're human beings.
Yes. And I always say, as a rule for me as a landlord, is I treat my tenants as if how I would want to be treated if I was a tenant.
I love that. And I think that that's key. I have investment properties too, and I've been so incredibly lucky that my tenants are golden. And that's a key that I live by. So I do things like on their birthdays, when their children are graduating, their children's birthdays, I'm the one to send them a little greeting card when they're celebrating Ramadan, when they're doing any other festivities with their home. I'll make sure that I at least acknowledge them, send them cute little gifts. You get what I mean. And make sure that the property, of course, measures up to their expectations as well.
Yeah, and that's part of the cash flow, right? So, you calculate all that in your budget, vacancies, put all that in a budget.
Yeah.
That's key, is getting those numbers done properly at the beginning.
Yeah, I love that. Can we talk a little bit about credit score when it comes to investing in property? Is it a big deal using and having a great credit score if you're going to purchase an investment property?
Yes,
okay.
680 is bare minimum.
So we're still at that 680,
680 is bare minimum.
Yeah.
The better your credit score, lenders consider investment properties as a higher risk type of mortgage, especially if you're doing the 4 units and under. Credit score is very important.
Fantastic. All right, so we're going to switch gears now, and we are going to talk a little bit now about scenarios. So we actually, or I should say I, have had the opportunity to speak to people who are looking to purchase in one way or another. So I'm going to talk to you a little bit about a couple of scenarios. These are like real life people, okay, who are looking for some advice as to how and what steps they should take. So first and foremost, I recently spoke to a couple They're in their 30s, and collectively they earn around $150,000. Okay. Now they do got some debt though, but it's student debt. They went to school and they've been able to pay off a good portion of it. So they have about $12,000 right now in student loans left over. And they do got a little bit of credit card debt in and around $1,500. You know, they like to have a good time. They have a lifestyle to upkeep, and they so have credit card debt of $1,500. Now I know what you're going to say, because they did mention that they want to potentially purchase a car. But at the same time, they've also been able to rack up a down payment of about $70,000 collectively. And they want to purchase a home. So based on this scenario, what advice would you give them?
The student loan, so it's not necessarily the balance that's important. It is, but not as much, especially student loans. Lenders understand you borrowed money to study. And a lot of time those payments are very small. So it's the repayment that's going to really be taken into consideration in the application. And then credit card, we understand, lenders along understand you have credit card balances. But if you have like a couple of credit cards and they're all maxed out, then yeah, it's going to be it will be something that will be considered. Right. What I suggest is if you do have $70,000 as a down payment, maybe take some of that money and pay off some of those credit card balances, and then you put less of a down payment.
Okay.
Right, that will clean up your credit. It will look better on the application. So that's one thing. But in this case, I don't see the student loan is not a big issue.
Okay. So we can approve them in some capacity of purchasing a property, provided that they kind of clean up their application a little bit.
Yes. I mean, maybe we don't even have to.
Okay.
That's why I say pre-approval is key.
And tell somebody, what is the difference between working with a mortgage agent like yourself versus going to the bank?
So the key difference is one, that's all I do is mortgages.
Okay.
Right? I don't do investments. I don't do anything else. I focus solely on mortgages, and I also have access to multiple lenders with different credit criteria, different rules to make sure you get that approval, and also the best rate out there on the market. Where if you go with one bank, you're dealing with that specific bank. And the other thing too, these advisors are doing, they have a lot more they do more investment in mortgages, bank accounts, credit cards. Right. They're looking at everything else where, as much as you want to know, mortgage is a lot to know.
Right.
Just capacity is not there sometimes with the bank.
Cool. So you're like a personal shopper and you can shop. In my case, if I were purchasing a property, you could shop my profile to a variety of different lenders to ultimately get the best terms, get the best interest rate. So it just makes sense to not just go to my bank. It makes sense to at least engage with a mortgage agent like yourself.
Yeah. I had a perfect example today on my desk. The bank actually called me and said, hey, we can't get this approved. And I got it approved with another lender.
Wow. Wow. So maybe for the individual who has been, again, thinking about purchasing a property, they might start at the bank. I get it. You might walk into your bank and say, hey, what do I qualify for? Especially if you have a long-standing relationship with your bank. But it obviously makes so much sense to engage a mortgage agent who can shop the different lenders for you and get you the best deal. Because who doesn't want a deal? Who doesn't want a deal out here, right? Yeah. Okay, so next scenario. We have a 28-year-old professional, and they're earning about $80,000 a year, which that's great. Now, they do, however, have a car loan of about $400 a month. And they do, however, have $10,000 in savings. So they're working really hard. Sounds like they maybe just exited school not too long ago. So they're right now kind of in the beginning phases of their career. They would like to buy a condo here in Ottawa, and they want to know how much they would potentially qualify for.
Again, I prefer doing a pre-approval. So the way my process is, I like to have all the documents up hand. Let's pull a credit check. Let's take a look at everything that's going on, and I'll tell you what you qualify for. In this case, we're just quickly on top of the head. I'm thinking you'll probably qualify for a purchase of $300,000 in this case, depending on the car payments, and there's condo fees involved in there. Not even, sorry, you said 10,000 as a down payment?
$10,000.
Yeah, so yeah. Sorry.
I don't mean to laugh. $10,000 is a whole lot of money, but let's be real.
Yes. So first advice I would say, they need to start safe.
Yeah.
Keep their credit clean. Make those payments on time. Don't rack up any more credit cards or any debts, and just focus on saving.
Right.
Putting some money aside.
Exactly. Because $80,000, that's a great income. But if they can come with more of a down payment, then that can open up a whirlwind of more opportunities for them. Hey, and if that car is a little bit too expensive, maybe even swap out getting another car that maybe price is a little bit more affordable. But $400 a month is still pretty good. But hey, just to take a look at your options there. Okay, cool. Now, let's talk a little bit about refinancing and somebody who wants to perhaps refinance their property. We did talk a little bit about earlier, but we talked about it from the standpoint of using that money to retrofit your house, do some renovations, which of course that's a key thing. But what about consolidating debt? Is refinancing your property a good thing to do if you're looking to consolidate some of your debts?
Yes. But most of the time, yes, is taking a look at how much debt you have, what's the interest rate on there, and how much, and a lot of times lines of credits, for example, balances are not going down. We're just paying the bare minimum of interest.
Right.
So you're not paying down principal whatsoever.
Wow.
So yes, taking a look at refinancing, because the cost, the interest on a mortgage will be a lot cheaper than a credit. We're talking about let's say 4.5% versus like a 21%
Right.
on a credit card. Lines of credits are probably, unsecured line of credit, probably around 8-9%.
Wow.
And then interest only. At least
Yeah.
you put on a mortgage, you're paying it down. And then it'll help with cash flow.
Right.
Where maybe you can start putting money, instead of paying those interests, you put it into savings.
Absolutely. You know what? And I recently had a client who encountered something very similar. They had a home equity line of credit. They were, and they got dinged by the interest rate increase. So now their home equity line of credit payments had almost doubled. And so, we were able to actually get that restructured into a mortgage, save them some money on terms of the interest rate, and then take some of that leftover money and pull back into some of their other debts. So that's also really key in terms of how to restructure, save your money on debts, and that is a great viable way for somebody to save money. And you know what, let's be also real. Right now, there's a lot of people who are struggling right now when it comes to the real estate market. It's also sad. There's people who are potentially on the brink of losing a lot, who are even one paycheck away from potentially losing their home. And it sucks. But we got to talk about it, right? There are folks who purchased a property in the height of the market. So during that COVID era, and right now their mortgage has already come up for renewal or is coming up for renewal. So they have seen their mortgage payments more or less double. And on the other flip side, they've also potentially have seen the value in their home decrease. So for those of you who are right now perhaps in that predicament or know somebody who is in that scenario and are looking for more understanding as to what they should do next, what advice would you give for somebody who's currently going through that circumstance?
First thing I would do is really do a deep dive in their finances. Take a look at what's going on, what's happening with their payments, personally, employment, and then make an assessment based on that. I will also tell those clients, go take a look with your, because buying a piece of real estate is, the strategy is always to make money is buy and hold. So if you're able to hold it, hold it. Okay. If you're not able to hold it, then sell it.
Okay.
If you're able to hold it to get back the value, because I'm dealing with a lot of those right now. People who bought in 2022, they're coming up for renewal, and now all of a sudden, payments have doubled from what they used to. And they said, we can't afford this anymore. So there's options of doing a refinance, reamortizing, getting a lower rate elsewhere. So there's all these options that we could try to do. But a lot of times they could go see the current bank. They don't want to lose the mortgage, and lenders are not in the business of repossessing. So they'll try to come up with a solution to help you out.
Okay.
It means deferral of payments, just to help out until, you can come up with a solution. But sometimes you have no choice but, it's to sell.
Yeah, I totally get you. I actually had situation a few months ago with a family who they were in that situation. They were over under on their mortgage. What they purchased for is not what is valued now, and their interest rate had increased. Their mortgage payments had doubled. They're a large family, kids, sports, all that good stuff. And what we did is we did just that. We really uncovered and took a deep dive into their finances. We were able to understand that there was opportunity for them to make additional income elsewhere by getting an extra income in some capacity. But then they also took it upon themselves to actually start renting out some of the rooms because, after we looked at it, we said, you know what? It really makes sense for you to hold. I know right now you are going through this time and it's tough. Right? And in some cases unbearable. We would have conversations for hours about how they feel so incredibly stressed out. But after we were able to sit down and create a solution, and you guided me on that, they are holding on to their property. They're making some additional income. They're also housing other individuals in their home. So they're, adding to the community and the greater good. And it looks like that they're going to be able to keep their house.
So yeah, and that's what's happening now. Is a lot of people are renting their basement unit or a bedroom, or just to add additional income to be able to pay down.
Right.
Keep that house until things get back to normal, and then if value comes back, then put it on the market and sell it.
Exactly.
Yeah.
So in other words, for individuals who perhaps are in that circumstance, before you do anything, before you make any trigger movements or decisions, speak to ourselves, Ivan here and myself, to give you further guidance as to what you can do and what solutions are available for you.
Yeah.
Awesome. So you know what, Ivan, this was fantastic. I think that I gained so much knowledge out of this, and I hope you did too. And it's all with the intent of you being much more informed when it comes to mortgages and lending here in Canada, that you do make the decision to get into real estate. And hey, let's talk a little bit about it. We asked it earlier. So is real estate still a viable option to create wealth with all and everything that's going on?
This stuck to me. This is why I got into real estate. One of my mentors a long time ago said, the only profession that still calls you a lord is a landlord. So yes, real estate, it is still viable to grow wealth in Canada.
Yes. And that's right. And in Canada, I know that there's so much conversations about, investing elsewhere, investing, whether it's other places in Canada, whether it's outside of Canada. I guess no matter where you decide, right, home is going to be home for either yourself or somebody or in other cases, a tenant. And one thing is that God ain't making no more land. So real estate, in my humble opinion too, is still a very viable opportunity. And what's great is there's no better time, in my opinion, that showcases itself to get in the market, whether you are a first-time home buyer or if you're buying your 100th property. So this is great. Ivan, I'm going to leave you on this last question. So what is one thing that you would like to tell people that perhaps they should know when it comes to mortgages?
It's not a debt. Mortgage I don't consider as a debt. There's an asset, an increasing asset going towards it. The worst thing you could do, like I said, is to liquidate and pay off that. Renting, you're paying somebody else's mortgage.
Right. So, oh my gosh, you know what? And I gotta be real. I come from a community, okay, where it's like you buy a house and the first thing you want to do is do everything to pay off that mortgage, like now. You're saying not so much, that it's okay, that I will live if I actually take some time to pay off the mortgage, but maybe do it in a smart fashion.
I would say yes, pay down the mortgage, don't get me wrong, but there's other things you could do with your money, right?
Yeah.
You could start savings, you have retirement, because if you pay down the mortgage, then how are you going to retire?
True.
You have to remortgage your house to invest to retire.
Right.
So there's other things you need to do is diversify your portfolio.
Yeah.
So paying down the mortgage, not always the best thing.
Yeah. That's awesome. Great. Well, thank you so much, Ivan. You're awesome. It's a pleasure being here with you. And Ivan is my preferred lender. We've worked together on a myriad of different options and opportunities for our clients. So if you yourself have any questions in relations to purchasing or even selling here in the Ottawa region, contact myself, Janelle Edwards, and Ivan Ramasawmy, and we would be happy to help you. Again, Ivan, thank you so much for your time, and cheers to you and more success and more closed deals.
Yes. Thank you, Janelle. Appreciate it.